Welcome back to Investing Talk Podcast, where we break down the stock market to help you make smarter investment choices. Today, we're diving into Gilead Sciences, ticker symbol GILD.
Gilead Sciences.
They've been making some serious moves in biotech, especially considering how shaky things have been in the market lately.
Yeah, Gilead's definitely an interesting case. They seem to be bucking the trend. The S&P 500 is flirting with new highs, but there's this undercurrent of worry, about inflation, maybe even a recession looming.
Right.
But Gilead's stock, it's surged over 6% just this past week.
6% is a pretty big deal these days. What's fueling this surge? Do you think it's sustainable, or are we looking at a temporary spike?
I'd say it's more than just a spike. Their Q4 2024 earnings just came out, and the stock jumped another 7.46% after that, blew past all the analyst expectations.
Wow.
And what's even more impressive is that both their revenue and profit exceeded forecasts. So it's not just one area doing well, it's a strong performance all around.
So they're hitting it out of the park on both revenue and profit, which does paint a picture of a pretty healthy company. But zooming out a bit, the biotech sector as a whole, it's facing some pretty strong headwinds right now.
Definitely. Interest rates are climbing, which makes it a lot harder for these companies to get the funding they need for all that research and development.
And of course, there's the Inflation Reduction Act, still shaking things up in pharmaceutical pricing. The long-term impact of that is still pretty hazy.
Yeah, there's a lot of uncertainty there. And you're seeing investors getting a little more cautious. They're moving away from those riskier early-stage biotech firms and looking for companies that seem more stable.
So where does that leave Gilead? Are they just riding a wave of positive sentiment, or is there something more strategic going on here, something that sets them apart?
That's the million-dollar question, right? I think to really get a handle on that, we need to take a closer look at Gilead's strengths and weaknesses.
Let's do it. I think a good place to start would be their pipeline. What are they cooking up in terms of new drugs or treatments? That's where future growth comes from, right?
Absolutely. A company's pipeline is essential in biotech. What therapeutic areas are they focusing on? How far along are these treatments? And how do they measure up against the competition? Are they going for blockbuster drugs or more niche therapies? These are all things we need to consider.
And while we're talking competition, let's zoom in on Gilead's market position. Where are they dominant? What are their major products? And how strong is their competitive advantage?
Yeah, we need to look at not just what they're selling now, but how well positioned they are to hold on to that market share, maybe even expand into new areas. Are they playing defense, or are they going after new opportunities?
Their earnings report makes things look pretty rosy, but we need to go deeper than that. How's their overall financial health? Are they generating enough cash flow to keep things running smoothly, support those dividend increases they announced, and invest in the future?
That's a crucial point. You need a strong financial backbone to succeed, especially in biotech. We need to dig into their debt, their profitability, how efficiently they're managing their resources. Are they financially sound enough to weather a storm if one comes along?
And speaking of potential storms, you can't ignore the regulatory risks in the pharmaceutical industry. Any changes in policy could have a big impact on Gilead's pricing power and even their ability to bring new drugs to market. What's on the horizon there?
That's a great question. It's something a lot of investors tend to overlook. We need to consider things like potential changes in drug approvals, pricing regulations, even shifts in healthcare policy that could create a less favorable environment for companies like Gilead.
So taking all of this into account, what's the big picture for investors? Is Gilead a stock you buy and hold on to? Is it a good bet for income-seeking investors given those dividends? Or with all this talk of investors shifting away from riskier biotech companies, could Gilead actually benefit from that trend?
Those are all great questions and ones we're going to explore in more detail. But remember, we're not offering financial advice. We're here to equip you with the knowledge you need to make your own informed investment decisions.
Now let's shift gears a bit and look at Gilead from a technical analysis standpoint for those listeners who love their charts and indicators. Right now, the stock is trading at $107.65, which puts it well above its key moving averages. We're talking 8-day at $100.54, 20-day at $94.98, 50-day at $94.48, and 200-day at $81.74.
What's striking is that all those moving averages are pointing up. That suggests we're looking at a pretty strong bullish trend. And the fact that the current price is so far above that 200-day moving average, that's really noteworthy. It points to some sustained upward momentum.
And other indicators like the RSI and MACD are also flashing buy signals. But there's a bit of a cautionary note here, as the stock seems to be approaching a resistance level.
Yeah, the RSI, which tracks the speed and change of price movements, is sitting at 55.25 right now. That's not quite in overbought territory yet, but it does hint that the recent rally might be losing a little steam.
And the MACD, a trend-following momentum indicator, is showing a bullish crossover. But the key question is whether that momentum can hold.
From a purely technical perspective, I think holding is probably the remove for now. If the price manages to break above $107.81, that would be a strong signal that the uptrend is going to continue. On the other hand, if you're thinking about buying in, it might be smarter to wait for a dip.
So in this first part of our Gilead analysis, we've covered a lot. We've looked at their recent performance, the trends shaping the biotech industry right now, their pipeline, their market position, their financial health, and even dipped our toes into the technical analysis.
Gilead is a company that's definitely worth keeping an eye on. Their recent performance has been solid, they've boosted their dividend, and they might be in a good position to benefit from how the industry is shifting. But before jumping in, it's crucial to do your own research.
Exactly. Dig into their pipeline, take a hard look at their financials, and make sure you understand the potential risks.
Knowledge is power, especially when it comes to investing. Check out Gilead's investor relations website, listen in on their upcoming earnings calls, read some analyst reports. The more you know, the better equipped you'll be. So let's dig a bit deeper into Gilead's dominance, especially in the HIV and hepatitis C markets.
Okay.
Their flagship HIV drug, Biktarvy, it's a huge revenue driver for them.
Right.
But patents, they don't last forever.
That's a good point. So how are they preparing for that eventual loss of exclusivity for Biktarvy? What's their strategy to stay ahead of the game when generics hit the market and maintain their leadership in such a crucial market?
Well, they're tackling it on multiple fronts. First off, they're pouring money into R&D, looking for those next-gen HIV treatments, ones that are even more effective and more convenient for patients. Think things like longer-lasting injectables or combo therapies that could simplify treatment regimens.
So it's about staying ahead of the innovation curve, basically. But what about their existing portfolio? Are they exploring ways to extend the patent life of Biktarvy or develop variations, with added benefits?
Definitely. They're actively working on things like new formulations or combination therapies that could help secure those additional patents. And they're looking at expanding the use of Biktarvy, maybe for different groups of patients or treatment settings, which would really solidify their market position.
So it's like they're playing offense and defense at the same time. Interesting. But moving beyond HIV, we know they also have a strong presence in the hepatitis C market. How are they navigating that space, especially considering the potential for cures and a shrinking patient pool?
You hit the nail on the head. Their hepatitis C treatments have been incredibly successful, but cures mean that market will shrink eventually. There's no way around it. And Gilead knows this. They're being strategic about it. They're starting to shift their focus, investing in new areas like oncology and inflammatory diseases, where there's a lot of unmet medical need and a lot of potential for long-term growth.
Makes sense. Diversification's key, especially in the fast-paced world of biotech. So speaking of oncology, what's in their pipeline there? What are some of the exciting developments that could really drive their future growth?
One that jumps out is drug name, a potential treatment for specific cancer. What's really interesting about drug name is its unique mechanism of action. It targets explain unique mechanism and potential, which really sets it apart from the current therapies out there and could offer a more effective and less toxic approach.
Sounds promising. But oncology is a competitive space, right? How does drug name stack up against the treatments that are already out there or the ones other companies are developing? What's their strategy to grab a piece of that market?
It's definitely a crowded space. Drug name has to go up against competitor drug, which is the standard of care right now for specific cancer. But drug name has shown some really promising results in clinical trials. Things like mention specific benefits, e.g. higher response rates, improved survival, or reduced side effects. Gilead's plan is to really highlight those advantages and position drug name as a better choice for patients who haven't responded well to other treatments or who are looking for something that's easier to tolerate.
Smart move. Focusing on those specific patient populations and unmet needs, that's often a winning strategy in oncology. Now let's zoom out a bit and talk about Gilead's overall financial health. Their recent earnings were impressive, no doubt. But looking at the bigger picture, can they keep this momentum going?
Well, overall, Gilead's got a very solid financial foundation. They generate strong cash flow, which gives them the flexibility to invest in R&D, pay dividends, even buy back shares, all while keeping their debt at a manageable level. And their payout ratio, which tells you how much of their earnings they're paying out as dividends, sits around mentioned specific percentage right now, which is pretty sustainable. It signals that they have some wiggle room to increase dividends down the road.
That's got to be music to the ears of income-seeking investors. But to really gauge the long-term sustainability of their dividend, we need to look beyond just the payout ratio, right? How does Gilead's dividend growth history compare to other players in the industry? Companies like Company 1 and Company 2, for example.
Excellent point. When you're comparing dividend-paying companies, you can't just look at the current yield. You need to look at their track record of increasing those dividends. And Gilead, they have a really good history here. They've consistently raised dividends for the past mentioned number of years, with an average annual growth rate of mentioned percentage. That compares favorably to Company 1 and Company 2, which have average growth rates of mentioned percentages. This tells me that Gilead is serious about rewarding shareholders and that their dividend growth is likely to continue, even as they branch out into new areas.
That kind of consistency is a big draw for investors, especially when the market's feeling a little shaky. But let's not forget about the regulatory landscape. How are those potential changes in drug pricing policies and healthcare regulations impacting Gilead's outlook?
Yeah, the Inflation Reduction Act, which lets Medicare negotiate drug prices directly, that's a big question mark hanging over the whole pharmaceutical industry. We're still figuring out exactly what the impact will be, but it could put some pressure on Gilead's pricing power, especially for some of their blockbuster drugs.
So how are they preparing for this potential shift in the pricing landscape? Are they proactively looking for ways to lessen the blow of these policy changes?
They're taking a multi-pronged approach. Firstly, they're focusing on developing those cutting-edge therapies that address really critical unmet medical needs. Those kinds of treatments are less likely to face major pricing pressure because they bring so much value to patients and to the whole healthcare system.
Makes sense. Focusing on innovation and filling those unmet needs, that's a smart way to stay ahead of the game. But what about their existing portfolio? Are they exploring ways to tweak their pricing strategies or their business models to adapt to this new reality?
They're looking into value-based pricing models where the cost of the treatment is directly tied to how effective it is and the benefits it delivers to patients. Plus, they're exploring partnerships with healthcare providers and insurers to really showcase the cost-effectiveness of their treatments and try to secure better reimbursement rates.
Sounds like they're taking a proactive approach to navigate this evolving regulatory landscape. Now let's shift gears a little and talk about this idea of sector rotation. Could Gilead actually come out ahead as investors shy away from riskier early-stage biotech companies and gravitate towards those perceived as more stable?
I think it's definitely a possibility. As investors become more risk-averse, they tend to look for companies with solid track records, strong financials, and a history of consistent performance. Gilead, with its market dominance, its healthy cash flow, and those steady dividend payments, could be seen as a safe haven amidst the volatility of the biotech sector.
That's an interesting perspective. But before we get too carried away with the potential upsides, we do need to remind our listeners that investing always comes with risks. What are some of the potential downsides or challenges that Gilead might face?
Right. No investment is risk-free, and Gilead's no different. They're facing intense competition from other big players in the pharmaceutical world. Drug development can be unpredictable, and there's always a chance of unexpected regulatory changes or market disruptions.
So for investors who are trying to weigh those risks and decide whether Gilead's a good fit for their portfolio, what's the best way to go about that?
Thorough research and due diligence, there's no substitute for that. Investors need to really dig into Gilead's pipeline, scrutinize their financial, understand the competitive landscape, and keep their finger on the pulse of those potential regulatory or market changes.
It sounds like a lot of legwork. But in the end, it's all about empowering yourself with the knowledge you need to make informed investment decisions.
Exactly. Investing's a journey, not a sprint. Making those informed decisions is how you navigate the market successfully.
Welcome back to Investing Talk Podcast. Let's round out our look at Gilead Sciences by diving into the technical side of things, charts, indicators, those sorts of things. They can really tell a story about a stock's momentum and where it might be headed.
Absolutely. Technical analysis can be a powerful tool for investors, especially when you combine it with a good understanding of the company's fundamentals.
Right. It's all about putting the pieces together. And as we mentioned before, Gilead's currently trading at $107.65. That puts it comfortably above those key moving averages we talked about.
Yeah, those moving averages, whether you're looking at the 8-day, 20-day, 50-day, or the 200-day, they're all trending upwards. It's a pretty bullish picture for Gilead. That upward momentum, it's hard to ignore.
And the RSI, the Relative Strength Index, it's sitting at 55.25 right now. That suggests the stock isn't overbought just yet. It might have some room to run.
That's an important point. When you see an RSI above 70, that often means the stock is overbought, could be due for a correction. Gilead's RSI, it's telling us there might be some more gas in the tank for this rally.
And the ACD, the moving average convergence divergence, that's also showing a bullish crossover, another positive signal for Gilead. But we need to keep an eye on those resistance levels.
For sure. Gilead's price is kind of hovering around its recent high of $107.81. If it can break through that level and do it decisively, that could signal we're going to see this uptrend continue.
But if it stalls out there, if it can't break through, we might see a pullback, right?
Right. It's kind of a wait-and-see situation from a technical standpoint.
So for investors who are already holding Gilead, what's the play here?
I'd say it's probably wise to hold tight for now, see if it can break through that resistance level. If it does, that could be a good time to consider adding to your position.
And for those who are thinking about buying in, maybe waiting for a dip or a confirmation of that breakout, would be the smarter move.
Exactly. Don't chase the stock. Let the technicals guide you on your entry point. Remember, patience is often rewarded in the investing world.
So we've covered a lot of ground with Gilead Sciences. We've looked at their recent performance, how they're positioned in the biotech industry, their financials, and even delved into the technicals.
Yeah, we've seen that Gilead has a lot going for it. Strong financials, a promising pipeline, and they might even benefit from this trend of investors looking for more stable companies. But, and this is important, like any investment, there are risks to consider.
That's why it's absolutely essential for investors to do their homework before making any decisions. Go to Gilead's investor relations website, listen to their earnings calls, read those analyst reports, and really weigh the potential risks and rewards.
Being an informed investor, that's what it's all about. Make decisions that align with your goals and your risk tolerance. There's no one-size-fits-all approach here.
Great point to wrap things up on. We hope this discussion about Gilead Sciences is giving you some valuable insights, something to think about.
And remember, this is just the beginning of your investing journey. Keep learning, keep exploring, and stay curious about the markets. There's always something new to discover.
That's it for this episode of Investing Talk Podcast. If you enjoyed this analysis, make sure to subscribe to our channel. We'll be back with more in-depth discussions on fascinating companies and investing trends. And if you found this helpful, please share it with a fellow investor and leave us a comment. We appreciate your support. Thanks for listening.